In this video, we're going to take a closer look at Medical Property Trust, a company that's been making headlines recently for all the wrong reasons. Hey, what's up? I'm Russ, and the big question on everybody's mind is whether or not they should invest in Medical Property Trust. So we're going to dive into the numbers and explore some of what I see that's going on with MPW. Over the past year, MPW's stock is down 64%, resulting in a dividend yield that's 171% currently above its 5-year average. Now, MPW has 10 years of dividend growth and a dividend that looks well supported by an 89% AFFO payout ratio. First off, let's talk about revenue. MPW's total revenues in 2022 were almost identical to those in 2021, with a slight decrease of $1.8 million or 0.1%, which indicates that their revenue stream was relatively stable and not an issue. But here's where things get interesting. MPW had to reduce the value of its real estate in Pennsylvania by $171 million and set aside $112 million for future rent payments that the company may not receive from its tenant Prospect, which accounted for 7.5% of 2022 rent. So this means that MPW does not expect to receive the full amount of rent owed by Prospect and will only record rent payments when they are received in cash. And it's not just that. MPW has a staggering $9.3 billion of debt due by the end of 2027, and Moody's rates MPW as Ba1, which is a credit rating assigned by Moody's Investors Service for a non-investment grade or speculative junk bond. Companies with a Ba1 rating are considered to have speculative elements and are subject to higher credit risk than bonds with higher ratings. But here's something that really caught my attention. Insiders have only sold the stock over the past 12 months, and given that this is the cheapest the stock has been since August of 2009, I would be really surprised and a bit concerned to find out if management has not been buying at these levels. But what really concerns me, and while I understand not buying real estate because interest rates have dramatically increased, MPW went from being net buyers of real estate in 2021 to net sellers of real estate in 2022. I mean, check that out. They realized $52 million in 2021 and $537 million in 2022, a 933% jump year over year. That is huge. They went from having $2.8 billion more acquisitions than dispositions in 2021 to $848 million more dispositions or sales than acquisitions in 2022. Given that they need property to collect rent, I wonder what they could be using that cash for. So check it out. As of year end 2022, they're up to $1.4 billion of investments into unconsolidated operating entities. An unconsolidated operating entity is a business that is not fully owned or controlled by another company like MPW and therefore operates independently and reports their financials separately. And because the tenants are all private businesses, we just can't see what's going on. But in this graphic from MPW, they claim to have made just over $1 billion of investments in 2022 alone. Either way, $1.4 billion invested in their tenants is almost 32% of their $4.5 billion market cap. Now, I think there should be very few performance-based awards for management at year's end, as last year there were 1.8 million shares awarded based on performance conditions. After the year MPW's had, I think they're just using this as a tool to extract money from the shareholders if they have similar awards for poor performance. So my conclusion on MPW is that it's just not a good idea to have equity investments in tenants, as this can make it difficult to see exactly how much those tenants are being propped up, how much of MPW's money is coming back at a discount, and I really just think it creates a conflict of interest. And additionally, both MPW and Steward, their top tenant, have sold a lot of real estate, which suggests that MPW may be funneling cash, that's my opinion, from property sales to a struggling tenant who is raising cash themselves in order to survive. And if a landlord's tenants aren't able to pay the rent, I don't see that dividend as being sustainable in the long run, and it looks like the market has already priced that in. So there's just too many shenanigans going on at MPW for me to feel comfortable investing in them. And while I hope those who do choose to invest do well, I've decided to stay far away from this company. Now, there's always a possibility that I'm wrong, and if you do think I'm wrong, we would love to know in the comments below. And if you found this helpful, consider subscribing. And for several companies that do get my stamp of approval and pay a monthly dividend, click the floating little box next to my head and I will see you there.